2025 is right around the corner and I want to see you succeed in trading. So today I'm going to be teaching you 3 skills that you can take into the new year and dominate the markets with. The first one is on the higher time frame, the second one is on the intraday, and the third one is on the lower time frame. So they're all going to piece together beautifully into a strategy that you can learn today and implement tomorrow. So let's get right into it. Now this first one on the higher time frame is more specifically about identifying higher time frame targets that you're going to trade in line with, and there's 2 tools that you're going to use to do this. Now this first one is institutional order flow, which is going to tell you whether price is bearish or whether price is bullish. And to identify this, you just want to see whether price is forming and respecting bullish PD arrays or forming and respecting bearish ones. So if we have a look on the weekly chart, right, you're primarily going to use the weekly, daily and 4 hour for this. If we have a look at this weekly chart, at any point that you're trading within here, you know, maybe you're back here trading in July, maybe you're trading here in August, you're simply going to look at what PD arrays are being formed and respected to get your answer. So back here, back in July, these 2 candles closed beneath these 4 bullish candles, which formed this bearish order block. So we've formed a bearish PD array, and we also form this bearish FVG. So the fact that price is forming bearish PD arrays tells us the institutional order flow is bearish and that price is moving to the downside. We then respect this FVG, and as I just said, we move to the downside in alignment with the institutional order flow. Even if we get later down at this bottom of the leg, you can see that we form this FVG here, another bearish array which is respected, and price moves in alignment with this to the downside. So you want to be in alignment with this institutional order flow. Now of course, when you change time frames, say let's go on a daily, there's going to be different things that go on this time frame that you don't see on the weekly. So for instance, that first FVG and order block that price tapped into and moved to the downside, for price to actually move there, we had to form bullish institutional order flow. You can see here on the daily that we formed this bullish order block. Okay, price formed a bullish order block by closing above these last 2 down candles. So that shows that on the daily, the institutional order flow was actually bullish. So once we see this and we have a target, i.e. the weekly FVG that price was going to drop from, we can actually trade in alignment with this bullish institutional order flow until we get there. And then you can see on the daily, once we reach that FVG and move to the downside, we then form a bearish order block, which shows that we're now forming bearish PD arrays on the daily in alignment with the bearish institutional order flow on the weekly. So they're both in line at this point. And again, price respects this and moves to the downside. So what you want to do is identify what the institutional order flow is doing. Is it bullish or bearish? And trade in alignment with that. So let's have a look at a bullish example quickly. So here on EU, this price leg to the upside, we want to identify bullish arrays or bearish arrays being formed and respected. So on the weekly, we actually have these 3 down candles that got closed above. So that's a bullish order block. So we can see we're forming bullish arrays. We also have this daily FVG, which price tapped into and rejected away from. So we're clearly forming bullish PD arrays and respecting them. So you want to be in alignment with that order flow. You can see here, these 2 candles here that got closed above, that again is a bullish order block that price has tapped into and is respecting. So that is bullish institutional order flow that you want to identify and trade in line with. Now, just like on the dollar index, when you go onto the different time frames, you're going to see, you know, some things that are a little bit different. So when price actually just now retraced into the weekly FVG that I said we reacted away from, okay, for us to reach that, there had to be some kind of bearish institutional order flow for price to actually get there. So if I replay this and we go down onto the 4 hour, so you can see these last 3 candles, they got closed beneath, okay? And that's formed a bearish order block. And as you can see, price continued to form and respect bearish arrays, right? We have this FVG here that got formed and price respected it and we moved to the downside. Here, another FVG that got formed and respected and then price moved to the downside. So you simply want to identify the institutional order flow on the different time frames and then trade in alignment with that. Now, if this seemed a little bit confusing to you, this second part is going to bring it all together. So the second part of identifying these higher time frame targets is using external and internal range liquidity. So once we have the direction of the market, right, let's say price is bullish. Okay, we're going to need to know what the target is for that bullish move, right? We can't just be buying forever. We're going to have to know the targets. And all this is ever going to be is external or internal range liquidity. So external range liquidity in a bullish example would be old highs. So we'd have these 2 old highs here. And the internal range liquidity is going to be the bullish inefficiency. So when price retraces, the internal range liquidity will be something like a bullish FVG within this leg here, and like a bullish FVG like this. So once we know that institutional order flow is either bullish or bearish, we need to identify whether price is going to one of these targets or one of these targets. Now, if we're bearish, just flip it around. We're going to be taking old lows and targeting bearish inefficiencies. So a real example of this here on EU, if we look at this leg here on the daily chart, okay, you can see that we have these last two candles that got closed above. That is the formation of a bullish order block. So we're forming bullish PD arrays and respecting them. So we're in a buy program. But what is the target for this? Well, you can see up here, this is an old high. Okay, so you would say that your target for this bullish institutional order flow moving to the upside is going to be this external range liquidity. Once we reach that, you then have to wait for price to present you with a new target, essentially. So what do we do once we take external? It's likely that price is going to come back to internal range liquidity. So when price actually gave that 4-hour switch to bearish institutional order flow by forming this bearish order block, you're then going to go ahead and look for an internal range liquidity target, because we now have bearish institutional order flow that you need to find a target for. And if we go onto the weekly, you'll see that price came and targeted internal range liquidity. Okay, and once we fulfill that target, again, that's when you sit on your hands and you wait for confirmation for another target. Okay, and you can see we tap into the FVG, and then if I jump down onto the daily, you'll be able to see that we had a big bullish closure here above this last down candle, okay, which is the formation of a bullish order block, which shows bullish institutional order flow. So that is confirmation that price is going to a new target. What is that target going to be? Well, we went from external to internal. Now we're probably going to go back to external range liquidity, okay? And as you can see, that's what price targeted. So all you're really going to be doing on the higher time frame is going back and forth between external and internal range liquidity and using institutional order flow to confirm that direction. That's all it is. So that's the first skill that you want to take into 2025 with you. The second one is on the intraday, and what it's going to do is going to give you some extra confirmation that price is respecting that higher time frame bias that you found. And I actually use something special for this because it combines price with the aspect of time to give you the highest probabilities, and it's something called daily cycles. So let me explain this so you actually know what I'm talking about. So essentially my model on the intraday, once you have that higher time frame bias, is to see price come into a buy zone if I'm bullish and take out some kind of liquidity. So if I draw it out here, if we were to build some kind of liquidity, maybe it's equal lows or something, and then for price to take that liquidity out into the buy zone where I will navigate my entry, and then I want to see price expand to my target. So that is my intraday model. However, it's very, very, very high probability if you align this with key timings, which is what the daily cycles do. So essentially what I'll be looking for is for Asia session to build up that liquidity in one of my cycles called London protraction. I'm looking for Asia to build up that liquidity. And then the sweep of liquidity, I'm looking for that to occur in London session, and then the entry in London and the whole expansion in London. So what this is doing is killing two birds with one stone. When I follow this framework, all I need to do is look for the sessions to do exactly what I wanted them to, and I know that I'm aligned with the times and I'm aligned with my actual intraday model. So a real example of this would look like this on the dollar index. So we have this 4-hour bullish FVG, which is the buy zone we anticipate liquidity to get swept into. And now we simply want to identify whether Asia has built the liquidity that I'm looking for or whether it doesn't fit the criteria. Well, you can already see Asia low here has formed relative equal lows with this old low down here. Okay, so we've built relative equal lows in Asia session. So we've built up that liquidity. So now I'm expecting London kill zone, this purple box, to sweep that out before moving higher. And if I play this out, you can see we take out these equal lows. We actually take out this old low down here, so more liquidity into that buy zone, and from there, that's when we expect the rest of the session to impulse to the upside to fulfill that daily cycle. And if I play it out, you can see that's exactly what happened, right? Price pushed to the upside. But how do we actually go about getting the entry within here before price moves to the upside? And that leads me onto the third skill, which is going to show you exactly how to do that. But first, I want to share with you a couple free resources I made. So the last video I put out actually contains 2 more daily cycles, both for New York. So you should go and check that out after this video if you want to learn more daily cycles. And then I also created a flow chart, which essentially is going to take you step by step in identifying these daily cycles, both London and New York. So you see here, if you're trading London session, you follow these steps and it will tell you whether, you're meeting the criteria of that daily cycle. And it actually includes some more specific timings than I've given in this video. So it's going to increase the probability even more if you use these timings. And I've also included my entry criteria, which you can go ahead and steal and get your entries just like me. Then if you're trading New York session, it's the exact same thing. You follow the steps, you either meet the criteria or you don't. It's very, very simple to follow. It's also got more specific key timings, which aren't going to be included in these videos. And it also includes my entry criteria, just like with the London daily cycle. So if you want this for free, I'm going to leave a link in the description. You can go and claim it. So let's get right back into the video. Now, this third skill is on the lower time frame, and it's going to teach you exactly how to get your entries before price runs to the target. So the basis of this essentially is when price enters that buy zone and sweeps out that liquidity on the lower time frame, price is going to be forming and respecting bearish arrays, right? In a bullish example, just like I explained with the institutional order flow. Now, what we want to see to get the entry is a switch in this order flow. So we want to see price essentially start forming and respecting bullish PD arrays. So whether we make a bullish order block, whether we displace through a swing high, something of that nature, that shows that the institutional order flow on the lower time frame has switched to bullish. Obviously, if you're bearish, you just flip this teaching completely around. So that's what we want to identify. Once we see that, you simply want to enter off of that newly formed bullish PD array. Stop loss can go at the low of the session and target can go at whatever your higher time frame target is. So if we break this down on the lower time frame on the 5 minute, you can see that price formed a bearish order block at the top of the leg here. We were also forming and respecting bearish FVGs like this one here. So we're clearly forming and respecting bearish PD arrays. So you want to see this switch before we actually go and get an entry. So if we look here, after tapping into the buy zone and taking the liquidity, we got a big displacement to the upside and price actually formed a bullish order block, right? Because we have closed above these last 3 candles, forming a bullish order block, which shows that we're forming bullish PD arrays, which shows the switch on the lower time frame to bullish institutional order flow, which is the confirmation to go ahead and enter. So you could have entered off of the order block, stop loss could go at the low, and you could have literally just targeted this high if you wanted to and got a 1 to 2. You can see price flew to the target. And if you had higher targets off the higher time frame, then you could have got way more risk to reward. So those are 3 skills that you can practice and take into 2025 if you want to dominate the markets. Now, if you're interested in learning all 8 of the daily cycles that I use, I'm going to leave a second link in the description where you can find out more about that. Now, as always, I hope you found value in this video and I will catch you on the next one.